Hey, what's up? In this video, I'm going to show you everything you need to get into your first apartment deal. I'm also going to show you exactly how much money you can make by being an apartment investor. I'm going to show you the 5 pillars that you need to be focusing on to get into apartment deals. And I'm going to break down for you how to underwrite a deal and raise capital to make it even easier for you to get into your first apartment deal or scale up if that's what your goal is. So let's get started. Okay, what we've got here, this is a grid that's going to show you the side-by-side comparison as if you're going to be a passive investor or a general partner. A general partner is someone who goes out and finds the deals and puts them together. It is not a passive role. Okay, you are finding deals, you're putting them together, you're submitting offers, you're doing the asset management, you're raising capital, or you're working with some other people who can do some of those things along with you. And that's where you have partners that help you get these deals done. So let's go through it. I'm going to show you exactly how much money you can make if you are a passive investor or if you decide to do your own deals or work with a few partners and really grow your wealth. Okay. And this deal, what we've got is we're assuming a $5 million deal, which I can tell you is very doable. We're assuming an 80-20 split, meaning 80% of the deal belongs to the passive investors and 20% belongs to the general partners. That's you if you want to put deals together. What that means is when you close the deal, you get 20 to 30% of the deal as the owner just for putting it together. And that's where you have a lot of upside in these deals. So for this example, we're assuming you either invest $50,000 as a passive investor or a general partner. You put $50,000 in also as a passive investor, but you get the benefits of being a general partner. So let me break down where you make your money and how much money you could make over the course of about 5 years on an apartment deal. That's a $5 million deal. Okay, so the first thing we have here is what we call an acquisition fee. So because you put this deal together, it's a $5 million deal. The first time you're going to make money as an apartment investor, as an active general partner, not as a passive investor, there's going to be $150,000 that come to you as a general partner for you and your partners on day one once you close the deal. Now, the next thing we're going to look at is the cash flow, because these deals all have a cash flow component and a capital gain, or when you sell the deal, the money that you make on it. So what this works out to is we're assuming a 10% average cash on cash returns, or 10% average over the course of 5 years at $4,000 a year. At 5 years, it's $20,000. So there's an additional $20,000 you make, and that's because of your $50,000 you contributed. Now, remember, you have 20% additional ownership as a general partner, and that's where you get 20% of the cash flow for the deal. So that's on another $45,000 a year, or $225,000 in total in cash flow for the deal. You also get, as a general partner, because you're managing the asset, and asset management fee. We're assuming it's a 50-unit deal at $1,000 per month for the property at 2%. So you get another $12,500 per year, or another $60,000 for this deal. Now, when you go to sell the property, remember you invested this $50,000, so you get your LP shares here of $20,000 for the deal, and the passive investor gets it as well. But you got this 20%, so you get another $360,000. At the end of it, had you invested $50,000 in this deal, you get your $50,000 back plus an additional 20 and 20,000, so 40,000. You would have made an 80% return on investment over the course of 5 years, and that's a 16% average cash on cash over the life of 5 years, or a 15% average return on investment year over year for the deal. That's much better than the stock market. It's almost double what you can get in the stock market, and that's just as a passive investor. And it doesn't include any of the tax benefits. Now, if you're a deal sponsor, you would have invested $50,000 here, but you would have made on top of that another $835,000 for you and your partners. And that right there is how you really accelerate your wealth, by investing in apartment complexes. And that's just something that you can't do by doing single family flips, single family rentals, or even the duplexes. It's a long, slow burn. And I don't even think you can probably do that wholesaling, at least not at scale, because you spend all of your time trying to find sellers and buyers. So this is a very, very, very effective strategy to really grow your wealth. But really quick, if you've never met me before, my name is Stephen Lee Thomas. I'm a multifamily investor. I'm a business coach, an entrepreneur, and a podcast host. And over the last 7 years, my partners and I have been able to buy and sell lots of apartment complexes, thousands actually. And here's a part of our portfolio, and you can see these are all large, professionally managed apartment complexes. Now, I gave you the example of 5 years, but to the best of our ability, if we can sell a deal sooner than 5 years and fully implement our business plan, we're absolutely going to do that. So you'll see some of these were an 18-month hold, a 2-year hold, 2 years, 3 years. This one was longer at 4 years, but we like to implement our business strategy as quickly as possible, but we always need to leave room for the market cycles. Okay, so what are those 5 steps I was telling you, those 5 pillars I was telling you about to get into your first apartment deal? So I'm going to walk you through that right now, but before I do that, I want you to understand that I know where you're at. Right now, you're on a path to being financially free. You want to be financially free and you want to get there using a proven, scalable system. And right now, you probably don't have a clear plan and proven strategy. So you're over here on this side. So if you master these 5 areas, it's going to help you get to point B much faster. So I like to start with mindset and getting started. Right now, you have this limiting belief that you might not be able to buy large apartment complexes, which is absolutely not true. In fact, I'm here to tell you, don't buy small deals. You should be going after larger deals. 20, 30, 40, 50, 60 unit deals is going to get you where you want to be much faster. Now, the routine part of this is you can do this even if you're not 100% dedicated. Most people do this where they have 10, 15, maybe 20 hours they can dedicate to moving this forward. So it is not something that you have to be 40 hours a week committed to. In fact, I did it while I was doing a full-time corporate job and raising a family. So I have a routine that I follow that I would share with you guys to help you get into these multifamily deals faster without having to give all of your time to them. You're also going to need to understand that this is a team sport and you're going to need a team to help you get there. And in order to do that, you need to clearly identify your role. From there, you need to figure out how to locate deals and actually have deals come to you so you're not spending all of your time trying to get those deals. Then you need to master how to underwrite deals. And to do that, you got to reach out to brokers, have them send you deals. You learn how to underwrite deals and effectively submit offers. Once you've got a deal, now you have to be able to pay for that deal. So you need to learn how to raise capital. So I'm going to show you how to raise capital, get leads, and get commitments long before you ever have a deal. Now, once you've got a deal, you don't want to be doing this asset management yourself. You don't want to be a property manager, so you're going to hire a property manager. And then there's specific tracking metrics that you want to learn so that you can run this like a business, because most people don't think about this, but when you buy an apartment complex, you're actually buying and selling a business. So what I want to do next is I want to show you the 2 areas where most people really struggle, and that's analyzing deals and raising capital. So let's get into underwriting. And underwriting is just how to analyze a deal before you make an offer. All right, so now I'm going to show you 4 steps on how to quickly analyze a deal so that if you are struggling with underwriting, this is going to help you get unstuck. Step number 1 is you need to figure out what your operating income is. And the way you do that, you take your number of units times 12, because that's going to be 12 months. And then you're going to factor in your market rent times 93%. And that's 93% occupancy is what our goal is here. Then we're going to figure out our operating expenses. And for operating expenses, it's typically 50 to 60% of the income, but I want you to target 50%. The next thing we're going to do is figure out our net operating income. That's operating income minus your operating expenses. Lastly, we're going to calculate the value of the property. And to do that, we're going to figure out our net operating income. We're going to divide that by the cap rate, and I like to use 6%. So we're going to use a real world example here. So on here, we have a 46 unit deal. We can see the unit mix here, and we have the effective rent. This is what they're collecting today. And then we have the market rent. This is what they could probably get for rent if they didn't do anything else other than just increase what they're collecting. Then we have pro forma. This is your forward-looking projections for what you could collect in rent if you implemented your business plan. So we're going to take this number right here, 1,118. That's our average rent we could get for this 46-unit property. So we're going to do this quick property analysis and break that down. What's the future value of this property? So you have 46 units times 1,118 per month. We got 12 months at 93% occupancy. That's $573,936. The next thing we do is we do step 2. That's our operating expenses. And we do 50% of our pro forma income. So it's half of this number, 286,968, which means our net operating income is 286,968 as well. So we take this number, our net operating income, and we divide it by 6% of 0.06. And that gives us our future value of $4.782,800,000. So now you have a quick way that you can analyze a deal to see if it's going to be worth investing in it now, and what would the value be like in the future if you implemented your business plan. Now, there's a lot more that goes into underwriting than this, so let me show you how you can simplify it as you begin to move forward. I like to take my underwriting and I like to break it into a 4-phase approach. It's just more systematic. It's much easier to follow, and it doesn't make sense to always be submitting an offer on every single deal. It just doesn't happen. So the way I like to think about it is you're trying to get onto a dartboard. And with each phase, you're trying to get closer and closer to the bullseye. So the first thing you're going to do is you're going to copy from the OM, and that's offering memorandum. That is the broker's marketing material. You're going to underwrite using that. And if you can get your total returns 50% or greater and your cash flow 4% or greater, then my advice is move to phase 2. At phase 2, you need some more information. You need a rent roll, a T12, a CoStar, or some type of industry data, and you need to do a high-level market survey. Update your underwriting. If your underwriting looks better than 65%, your cash flow is over 5%, move on to phase 3. At phase 3, you need to do a much more detailed market survey, and you're going to get vendor quotes. Your vendor quotes are going to be things like your insurance, maybe your tax protesting. You need to have a property management company look at it, and you need to have a pretty good indication of what your debt is going to look like. Take all that, update your underwriting. If your cash flow, if your total returns is looking greater than 80%, your cash flow is over 5.5%, my suggestion, move on to phase 4 and schedule a property tour. Don't submit the offer yet, just do a property tour. Then once you've learned everything you can and you update your underwriting, if you can get your total returns better than 80% and your cash flow closer to 6 to 7%, then that's when you need to submit an offer. But along the way, if you can't hit these thresholds, my advice is just move on to the next deal and reach back out to the broker and tell him why it wasn't making sense for you. Now, the people that I coach, I walk them through this in a whole lot of detail, and I give them a checklist. It's got over a 200-point checklist to help you step through underwriting every step of the way so that you're submitting LOIs that actually make sense. Okay, here's everything you're going to need to underwrite a multifamily deal. The things here are in green, and when you first reach out to a broker, here's what you want to tell them you're looking for: an offering memorandum. They don't always have these. If it's really an off-market deal, they're not going to have an offering memorandum. That's the marketing material that the brokers put together. You also need a T12. That's a 12-month profit and loss statement, and you need a rent roll. Ask for those things, and that's going to help you with your underwriting. From there, you need a unit mix. You need a rehab estimate, how much money you're going to spend rehabbing the property. You need your actual NOI, your net operating income. You need to build a pro forma NOI based on your rehab estimate. You need a debt estimate, an insurance quote, and you absolutely need a property analyzer that'll give you at least a 5-year forecast. You also need to do a market survey, and you cannot move forward without some market data. I like to use CoStar. There's Yardi, there's Crexi, there's a few others out there, but do not move forward without getting some good market data. So that's everything you need to underwrite a multifamily deal. So the next struggle you're going to have is, how do you pay for these apartment complexes? So now we're going to talk about capital raising. That's how to raise money before you make an offer. The core thing you need to understand here is that a marketing funnel is the thing you need to be learning how to do. Now, I don't want you to make this overcomplicated, but nobody ever explained to me how raising capital is basically a marketing funnel. So we have these steps we want to move people through to be able to raise capital: awareness, interest, conversion, and loyalty. So the first thing you're going to do is to find a list of people you can reach out to. Then you hit them up and you reach out to them and you say, hey, can we hop on a quick phone call? Can we do a quick Zoom? You're going to ask them to book a call with you. That's your call to action. A call to action is how you move people through this funnel. Then you're going to do a one-on-one call with them, and you're going to share with them how apartment investing works. At the end of it, you're going to say, hey, would you like to invest in a deal with me at some point in the future? I don't have one now, but when I do have one, would you be interested in investing? And you're getting a soft commitment from them, okay? So now you've converted them. But what you need to do is you need to get them onto your deal. So when you have a deal, you're going to host a webinar, you're going to send them the deal information, and you're going to ask them to invest in that deal. But back here, they already told you how much they would potentially invest with you. Okay. But how do you keep them warm in between? You send them a biweekly newsletter. Just tell them what you're working on. Tell them what you're focused on. Tell them what your goals are. Tell them about your kid. Anything. It doesn't matter. Just keep sending them something so they know who you are. Then you either ask them to invest in your deal or invest in another deal. And when you get the opportunity, ask them for referrals, and that way you can grow your pool of investors. So now you have a nice overview of creating a marketing funnel. Once again, keep this simple. You do not need anything crazy to build a marketing funnel. Now you're thinking to yourself, Steven, that's great, but who do I talk to? Okay, the people you're going to talk to, those are people who are warm, not cold. You want to talk to people who you already know, because if nothing else, they'll give you feedback. So a great approach I like to use is, hey, I am getting into multifamily investing. I really like what the returns look like. I put together a pitch deck that walks through how this whole thing works. I would love to get your feedback. Would you mind hopping on a call with me? And most of the time, you will get people, especially if you know them already, they will be happy to jump on a call with you. If you try this with people you don't know when you're first getting started, they're probably not going to hop on a call with you. So this is really where you need to start. Now, you might be thinking to yourself, Steven, that's great, but what happens when I run out of all those people that I already know? Well, here are the 4 people that you can hit up at any time. So you are here right now. These are people who you know, and you can have a one-on-one private conversation with them. Then there's people who you don't know, and how can you learn to speak in one-to-many fashion so you don't have to have so many one-on-one conversations. So naturally, the thing to do here is either go from your warm outreach, you have to start building your network bigger and bigger and bigger. And at some point, you will have to do cold outreach, and you have to warm them up. So you reach out to these people who you don't know, and you start putting them back in here. How can I warm them up and get them over here? Also, you have your ability to post free content. And ideally, you post free content and you move people back in here where they're nice and warm. And those of you that are very advanced, and when you're ready, you can also run paid ads. And that way you can drive people here. You're trying to find people and warm them up so that you can have this one-on-one conversation with them. And that's it. Don't overcomplicate it. This is how you find people to invest in your deals. But I think you'd be surprised at how many people are in your existing network that could potentially invest in your next deal. Okay. Now you're thinking, Steven, that's great, but what do I say to them? How do I approach this? I've never done a deal before. Well, that's all right. I'm going to walk you through what's called the story brand framework. And in this framework, there are 2 characters in there. There's someone who has a problem, and then they meet a guide. You are the guide. They are the hero of their story. And as the guide, you're trying to help them create this amazing story for themselves, which is the future version of themselves. Most people have a problem where they are not hitting their financial goals. They're going to have to work longer than they want. And they don't have enough money in their retirement savings, and they might not even know very much about how to invest. But what you're going to do is you're going to start teaching them about apartment investing. That's where you give them this plan. Hey, did you know there's this alternative investment called apartment investing, and it might help you solve this problem? Then you give them a call to action. You say, hey, I want you to invest in this next deal. And as a result, what happens is that leads them to success. It moves them away from this pain, this problem. It gives them success and helps them avoid the failure. So all you're doing is you're giving people the opportunity to invest in an alternative investment of apartment complexes. And it's really going to help them accelerate their ability to retire sooner and actually probably pay a whole lot less in taxes. So what's everything you need to be able to raise capital? The first thing is you need to understand who is your ideal investor. And whoever that is, you need to go wherever they are and you need to start connecting with them. And from there, you're going to start creating a hit list. That's a list of potential investors. You're going to create a marketing funnel. Keep it very simple. Put it on the back of a piece of paper. Put it on a whiteboard. It doesn't matter. You don't have to build any crazy process or buy any software. Just Have the steps lined out of how you're going to move people through your funnel. You're going to start reaching out to them. And once you start reaching out to them, you need to have your pitch. What is it that you're going to be doing with apartment investing? And you're going to get them onto a one-on-one call. Once you get them on that one-on-one call, you share this pitch deck with them. But it's just an apartment investing overview. Here's what apartment investing looks like. Here's what the potential returns look like. If you have some examples of past deals, throw those in there. If you have some examples of the tax savings, throw that in there. At that point, you ask them for a soft commitment. You say, hey, Joe, would you like to invest in a deal coming up in the future? They say, yeah, Steven, I would love to. How much? 50,000. I think I'd like to start at 50,000. Cool. The next deal that comes up, I'm going to reach out to you and I'm going to share the specific deal and I'm going to ask you to invest. Okay. That is how you raise capital. And you can do that. All of you can do that. I guarantee it. You can raise capital for your deal, but you have to start raising capital before you get the deal. All right. So let's do an overview of what we were just watching here. You were here before you watched this video. You did not know the plan and you didn't have a strategy. You weren't sure how to buy and scale effectively. You weren't sure how to become financially free. But what I've done is I've just outlined the path that you need to take and the pillars you need to focus on to become financially free. And I helped you outline what you need to be focusing on for underwriting and raising capital. So this is going to help you create that plan and a proven strategy and a proven scalable system so that you're on a path to becoming financially free. But hey, look, I know that buying your first apartment deal is hard and it can be very lonely. This is a team sport. You should not be doing this alone or you might not ever achieve your goals. So what if I could help you solve the biggest problems? And that's with underwriting and raising capital and these other pillars. And then show you how to go full time as an apartment investor. What would that do for you? And the answer is it would change everything. So what I've done is I've created a coaching program that's going to help you get where you want to be. It's called the Multifamily Mastery Accelerator. It's going to accelerate you on the path to achieving your goals of financial freedom. This is not a do-it-yourself program. It is not a done-for-you program. It is a done-with-you program. Look, I've done a lot of coaching in the past, and this is the best model. When you can do this with the help of a coach, and when you can do this with other people who are going down the path on the same journey, you can create some amazing synergies and you can all get there together faster. So if you're tired of YouTube University, if you're tired of trying to do this yourself, if you're tired of just being where you're at and being stuck, then I want you to click the link below and I want you to schedule a call. On that call, what we're going to do is we're going to take a look at where you're at, where you want to be, what your obstacles are, and I'm going to tell you exactly what you need to be focusing on. And if I think you're a good fit, I'm going to share with you what the coaching program looks like. And if you're ready, then you can move forward and you can be on the path to getting into your first apartment deal or your next apartment deal and really accelerating where you're at in your journey. So look, I'm looking forward to helping you out, seeing you on a one-on-one call. So schedule that call and I'll see you soon.